The wake-up call your future self needs. You won't feel the pain now, but your 65-year-old self will. That's the hard truth most people don't want to hear. Retirement may seem like it's decades away, especially when you're focused on building a career, raising kids, or just making ends meet. But the reality is, every financial decision you make today has a ripple effect that leads directly to the life you'll live in retirement. Will that life be one of freedom or one of struggle? In this video, we'll expose the biggest retirement mistakes people make, mistakes that could leave you broke when you need security the most, and more importantly, we'll show you how to avoid them. 1. Waiting too long to start saving. One of the biggest retirement mistakes people make is saying, "I'll start saving later." At 25, it doesn't seem urgent. At 30, you think you still have time, but before you know it, you're 45 with no real savings, and the pressure starts mounting. The problem isn't just the lost time, it's the lost compound interest. Someone who starts saving $200 a month at age 25 could end up with more than $500,000 by 65, thanks to the power of compounding. But wait until you're 40, and you'll need to save more than double that monthly amount to catch up. Time is either your best ally or your worst enemy. The earlier you start, the less you have to save each month, and the more financial freedom you'll have later on. 2. Relying only on pensions or social security. Many people falsely believe that a job pension or social security will cover all their retirement needs. While it's true that these can be helpful income sources, relying on them as your only safety net is a dangerous game. Corporate pensions are disappearing, and many companies are slashing benefits or going under entirely. And social security, it's under pressure and may not offer the same level of support to future retirees that it does today. The only way to truly secure your retirement is to diversify your income streams through 401ks, IRAs, stock market investments, rental income, or even side businesses. Your retirement should not depend on factors you can't control. Build multiple paths to financial independence. 3. Not knowing how much you actually need. Ask the average person how much they'll need to retire comfortably, and most won't have an answer. That's like setting out on a road trip with no map and no idea where you're going. You need to define your retirement number. How much will you need each month to cover your expenses? How long do you expect to live after retirement? What will inflation, healthcare, and lifestyle changes cost you? These questions are crucial. Use a retirement calculator or speak with a financial advisor to create a clear, realistic goal. Saving without a target is like trying to hit a bullseye in the dark. Knowing your number gives you purpose, direction, and peace of mind. 4. Living like you're rich today instead of building wealth for tomorrow. Lifestyle creep is a silent killer of retirement dreams. You get a raise, and suddenly you upgrade your apartment, lease a better car, or buy the latest tech. You start spending more because you're earning more. But here's the thing, just because your income increases doesn't mean your spending should. Every dollar you spend today on fleeting luxuries is a dollar your 65-year-old self won't have. Instead of upgrading your lifestyle with every raise, try upgrading your savings rate. Automate your increases. Treat financial freedom like a luxury worth more than designer clothes or a flashy car. Build your future, not just your image. 5. Cashing out retirement savings early. This is one of the most damaging choices people make. You leave a job and see your 401k sitting there. Maybe you've had an emergency or just want to use the money for something worthwhile, so you cash it out. Big mistake. Not only do you lose a huge chunk to taxes and penalties, often over 30%, but you also lose years of compounding. What you take out today could have been triple that amount by retirement. Retirement accounts are not emergency funds or vacation budgets. They are sacred. Let them grow untouched, unless it's a life or death scenario. Your future self will thank you. 6. Playing it too safe with investments in your 20s and 30s. Many young people make the mistake of playing it too safe. They keep all their money in savings accounts or conservative bonds because they're afraid of market losses. But by doing so, they miss out on the biggest wealth-building years of their life. In your 20s and 30s, you have time to recover from market dips. This is when you should be taking smart, calculated risks with a growth-oriented investment strategy. Stocks historically outperform other asset classes losses in the long run. Diversify, yes, but don't sit on cash expecting it to grow. Inflation will eat it alive. Let your money work as hard as you do. 7. Underestimating healthcare costs in retirement. Healthcare is one of the largest expenses retirees face, and most people don't plan for it. According to Fidelity, the average retired couple may need more than $300,000 to cover healthcare costs in retirement. That includes prescriptions, hospital visits, insurance premiums, and out-of-pocket costs. If you haven't built that into your retirement plan, you could be blindsided. Consider using a health savings account, HSA, if eligible. It allows you to contribute pre-tax dollars, grow your savings tax-free, and withdraw it tax-free for medical expenses. Healthcare is not optional. Plan for it like your life depends on it, because it does. 8. Ignoring the impact of inflation. Inflation is the silent thief of retirement. Prices go up year after year, but if your savings don't keep up, you lose purchasing power. $1,000 today won't buy you the same amount of groceries, gas, or medicine 20 years from now. Yet many people build retirement plans assuming today's costs will stay the same. Big mistake. You need to factor in at least 2–3% inflation annually into your projections. That's why investing in inflation-beating assets like stocks, real estate, and index funds is so crucial. Your retirement savings shouldn't just grow, they should grow faster than inflation. 9. Not preparing for life's curveballs. Unexpected events, like job loss, divorce, medical emergencies, or caregiving, can drain your finances quickly if you're not prepared. That's why having an emergency fund is essential. You also need basic estate planning, a will, healthcare directives, and power of attorney. Think of retirement planning like building a boat. You don't just need a strong sail, you need life jackets, oars, and an anchor in case of storms. Don't leave your future to chance. Prepare for the worst, and give yourself options when life doesn't go as planned. 10. Believing it's too late to start. Here's the most dangerous lie you can believe: it's too late for me. No, it's not. Even if you're 50 with no savings, it's not over. You can still take powerful steps, reduce expenses, boost your income, invest aggressively but wisely, downsize your lifestyle, or even delay retirement to maximize Social Security. You might not retire with $1 million, but you can still retire with dignity. The worst thing you can do is give up. The second worst thing: keep waiting. Start now. Take control. Every dollar saved today is a brick in the foundation of your freedom. Your 65-year-old self is counting on you. So now ask yourself, which of these mistakes are you making? More importantly, what are you going to do about it? Retirement isn't just a date, it's a lifestyle you're building right now. The decisions you make today about saving, investing, spending, and planning will determine whether your future is filled with stress or freedom. Drop a comment below. Which point hit home for you the most? Have you made one of these mistakes, or are you already taking steps to fix them? And if this video gave you the wake-up call you needed, do your future self a favor. Like this video, subscribe to our channel, tap the notification bell so you don't miss more smart money moves. Let's build a future that feels just as good as it looks, starting now.